Good morning, good morning, good morning. Today we're back with a new video on Bitcoin. Gonna cover the technicals, the fundamentals, and why price is behaving the way it does. So yesterday we concluded that price needed to break this level here to get a bit of a chance to long, but like what you see here, like a big inefficiency is created. So price could like sweep this liquidity and go even lower, because as you see, like price structure on the daily, it's still very bearish. So we need to keep that in mind, because the long-term value of Bitcoin is super. I believe it's going back to all-time highs. But at this moment, we need to look at what price is doing, what market participants are doing, and at this moment, it's just respecting a bearish order flow. As you can see here, yesterday it swept and it took liquidity here and is now expanding further down. So when we look at the H4, you can clearly see like this order block is getting respected beautifully. We have this liquidity level, this liquidity level, and this liquidity level here. Oh. So what I'm trying to do is, if this here, this this here breaks with a clean body close, I will try to aim for these lows and these two lows. Could be that price just stagnates, but given that price structure is bearish, there is room. And looking at the volume here, there is volume. I'm anticipating some sort of bearish outlook for today. So at least this low, and possibly even this low if volatility kicks in. So it looks nice, as you can see as well here with the Bitcoin dominance chart. It's stagnating. So the reason I'm also doing only Bitcoin is because at this moment Bitcoin is the most stable cryptocurrency, where the perceived value is the biggest. As you now see institutions, private wealth getting involved in the crypto market, it flows into Bitcoin, and thereafter, if the projects, the altcoins, provide real world value, the flow of money will flow from Bitcoin towards altcoins. Like when you see with the Forex market, where every foreign exchange that wants to participate in the stock market first has to go to the FX market to buy dollars to invest in the stock market. I think it's going to be the same with Bitcoin. But when we look at the data, we start with the options data, where you here see like a pretty balanced thing. There are more calls bought than there are puts bought, and more is being bought than is being sold. Open interest remains the same here, and by strike price, you see 60,000 is a big level where a lot of puts get in the money. So when we reflect back, what can happen there is when 60,000 is hit, yeah. So when 60,000 is getting hit here, and here, and here, and here, every put is in the money. What does that mean? That whenever the market participants will exercise on their options, it will cause like a chain reaction down, because when puts are exercised, the market maker needs to sell the puts, which means that there's more selling pressure coming into the market. So keep that in mind, that 60,000 is a very important level in terms of like option data. So don't burn your hands here. You can see like a shift of volatility moved by like a consolidation phase where they are getting repositioned. You see a put call ratio at this moment. It's a little bit more puts than calls, but nothing significant. And volatility is not that much. When we look at the futures data, also important. Volume is getting up, open interest coming down a bit. You see a big spike in option volume. So the market is well repositioning themselves to really find a way to capitalize on volatility. You see the volume here is big. It's big. This is also a very important thing where the funding rate hits a 2-week high, so that's bullish for Bitcoin. So you could argue that 70,000 isn't a bad level to look at, to go long at, but the other side of things is that Bitcoin is experiencing a heavy outflow of institutional orders. So when we look at this, you can clearly see that from the 4 big ETFs and a bit smaller ones, a lot of outflow is going on. So you see here the net 68, 90 million, 82 million, here a little bit positive, but still net negative. You see here like 10 of June, 213 million is getting out of the market. And you guys need to remember, this is net volume. So when you look at this, it's a lot of volume, and you think like, oh, what is 213 million dollars in like a daily volume of 24 billion or something? Well, you need to remember that this is like buying and selling volume, and also a lot of intraday trading, like algorithms. So algorithms, and especially high frequency trading, it's a lot of buying and selling in milliseconds, which means that the volume is going through the roof. Because when you want to take like a couple of basis points in a millisecond, you can really execute with high volume, high leverage, because your exposure is covered with the time constraint. So 213 million, and the net million, like maybe minus 400 million, is a big number. It's really a big number where you need to take into account what the institution is doing. And at this moment, there's a net outflow. Money is getting more expensive, so really the fundamentals are at this moment against the trading, against trading longs on Bitcoin. So really keep that in mind, that we need to see some sort of confirmation. That the biggest confirmation for me would be that this here, this one is broken. So we want to see that a big volume here is injected, net buying volume. This thing is broken, and in this lag, these kind of patterns, the imbalances are getting created. So we know that the momentum is shifting, and we can like target these highs here. these highs here to really zone in and get back to that bigger, higher time frame highs. So I hope you have enjoyed, and thank you. Thank you for watching me, and I will see you tomorrow with a new video.